Click the bell icon to get latest videos from Ekeeda.
Hello friends, while doing accounts of NPO, we may come across adjustment of loss on sale of asset. How to give its treatment, that will be understanding in this question. Let us go through the question. From the following balance sheet and receipts and payment account of Indian Hospital Pune, prepare income and expenditure account for the year ending 31st March 2012. So current year is 2011-12. Next year is 2012-13. And previous year will be 2010-11. And balance sheet as on that date, considering the adjustments therein. Opening balance sheet is given. Capital fund, this will be recorded on liability side as opening balance of capital fund. Medicine bills unpaid, that is of previous year 2010-11. Asset side we have cash in hand, cash at bank. These are the opening balances of cash and bank. This will not be recorded anywhere in accounts. Land and building, furniture, equipment, outstanding subscription. This is subscription receivable of previous year 2010-11. Receipts and payment account as on 31st March period. They have given here opening balances of cash and bank. Those will not be recorded anywhere in the accounts. Subscription, it will be recorded as income. Subscription received includes 1000 received for previous year. This will be subtracted from total subscription received. Sale of furniture 10,000. Book value is 15,000. That means as per our books of account, its value was 15,000. But we have sold it for 10,000. So 15,000 minus 10,000, there is a loss of 5,000. This loss 5,000 will be recorded as expenditure. In balance sheet asset side, we will have to deduct 15,000. Donation which are of revenue nature, it will be recorded as income. Life membership fees. Second adjustment says capitalize the amount of life membership fees. So it will be added to capital fund. Let us go through the payments. Salaries, it will be recorded as expenditure. Purchase of medicine 26,000. Payments are made. Here medicine bill unpaid is given. So we'll have to adjust this 3,000 here on expenditure side. We just assume that previous year bill is paid first. Equipment purchase, this is capital expenditure. It will be recorded on asset side. General expenses, expenditure. Closing balance of cash and bank, this will be recorded as asset. Adjustment number 1, outstanding subscription 6,000. One effect, it will be added to income. Second effect, asset. Outstanding salary 6,000. It will be added on expenditure side. Second effect, liabilities. Depreciate land and building 10,000. This will be recorded as expenditure. It will be deducted on asset side from land and building. Equipment 15,000. It will be recorded as expenditure. Second effect, it will be deducted from asset. Let us start with opening balance sheet. First item we have capital fund 5,02,000. This will be recorded in new balance sheet on liability side as starting point. Liabilities, capital fund we have 5,02,000. Medicine bills unpaid, amount is 3,000. These bills belongs to previous year, is recorded as unpaid on liability side. Opening balance of cash in hand, opening balance of cash at bank, this will not be recorded anywhere in accounts. Land and building 4 lakhs. Land and building 4 lakhs is recorded on asset side. There is adjustment of depreciation on this. Furniture 35,000. On asset side we have furniture 35,000. Equipment 60,000. On asset side we have recorded equipment 60,000. Outstanding subscription 1,000. That is of previous year. Asset side outstanding subscription for 2010-11 amount is 1,000. We have recorded items in opening balance sheet. Let us go through now income and expenditure account. Let us go through now receipts and payment account. We'll start with receipt side. Opening balance of cash, bank, it will not be recorded anywhere. Subscription received 65,000. Income side subscription received 65,000. It includes 1,000 for previous year. This will be deducted from here. It is received for last year 1,000. So outer column will have 64,000. Here on asset side we have outstanding subscription of previous year 1,000. Less received that amount 1,000. So outer column will not have this item of outstanding subscription. Next we have sale of furniture having book value 15,000 sold for 10,000. So this book value 15,000 will be deducted from asset side. Furniture 35,000 less sold 15,000. So balance furniture will be now 20,000. Loss on sale of furniture 5,000 will be recorded as expenditure. Loss on sale of furniture 5,000. Next we have donations, revenue donations received 22,000. This will be recorded as income. By donations, revenue nature received 22,000. Next we have life membership fees 12,500. Second adjustment says capitalize amount of life membership fees. Life membership fees received 12,500 added to capital fund. Let us go through payments. Salaries 55,000. It is recorded as expenditure. Salaries 55,000. Next we have medicines. We have paid 26,000. There is opening balance of medicine bills unpaid 3,000. This will be deducted from this amount of 26,000. Paid for last year 3,000. So balance is 23,000. Equipment purchase 10,000. It is added here. It has become now 70,000. Next, general expenses 4,300 will be recorded as expenditure. To general expenses 4,300. Next we have closing balance of cash and bank. It will be recorded as asset. Cash in hand 7,700. Cash at bank 15,500. Let us discuss adjustments. Outstanding subscription 6,000. Outstanding subscription added here. It has become now 70,000. Second effect here on asset side. Outstanding subscription for 2011-12 amount is 6,000. Outstanding salary 6,000. We'll have one effect on liability side. On liability side, we have recorded outstanding salary 6,000. Here on expenditure side, outstanding salary we have added 6,000. So it is now 61,000. Depreciate land and building 10,000 and equipment 15,000. These two depreciations will be recorded as expenditure. Depreciation on land and building 10,000. Depreciation on equipment 15,000. Total depreciation is 25,000. Land and building 4 lakh less depreciation 10,000. Outer column 3,90,000. Depreciation on equipment 15,000. Now net value is 55,000. Liability side, we had opening balance of medicine bills unpaid. Those are settled during the current year. So this item will not reflect in new balance sheet. We have given effect to all items and adjustments. Let us close first income and expenditure account and then balance sheet. We have closed income and expenditure account. We are getting balancing figure on credit side. It indicates excess of expenditure over income, that is deficit. This will be deducted from capital fund on liability side. Capital fund we got closing 4,88,200. Total of asset side is 494,200, which is equal to liability side total 494,200. It means balance sheet is tally. In this question, we learn how to give effect to items of loss on sale of asset while preparing final accounts of NPO. Thanks for watching this video. Stay tuned with Ekeeda. Subscribe to our channel Ekeeda. Thank you.